Very much. And now to start the discussion, I'll turn it over to MP Perkins for 6 minutes.
Thank you, Mr. Chair, and thank you, witnesses, for this appearing at the start of this important study. My first questions are for the Canadian Bankers Association. Can you tell me by member institution of the CBA what the return on equity of the credit card business is for each bank?
No, I can't specifically for each bank, and certainly not by business line that way.
Can you, if you have access to that, can you pledge to table that with the committee?
I don't have access to it by business line.
Okay, I'm just talking about the Visa business, not by.
I understand that.
The credit card business. Okay, does the CBA have access by each of your members to what the loan loss percentages are for each, for the credit card businesses?
Not by institute. We don't gather the data. We don't gather data like that by institution.
Would you pledge
I can
to go
tell you
and
in
get those
aggregate.
Can you pledge to go get those from your members?
No, I can tell you in aggregate, though, that the arrears rate for the credit card business writ large is about 1.6% currently.
1.6%, pretty modest. So the next series of questions I have are for Mastercard. Appreciate your presentation. Can you let me know, please, or let the committee know what your revenue was last year globally? Well, publicly reported Mastercard's revenue was $25 billion US globally.
Sure.
How about the operating income?
I don't have that with me at the
It was $14 billion US last year. How about the net income?
probably around 11 billion.
Not around 11.1 billion. So you do know the numbers. Cybersecurity is very, very critical for everybody at this table, right?
Of course.
Can you tell me how important it is for Mastercard? Because I see you recently bought another cybersecurity company for $2.1 billion called Recorded Future. What can you tell me about cybersecurity and the importance and how much you spend on that a year?
I don't have the exact numbers. I can tell you strategically, it's one of the important pillars that we're focused on. We've talked a lot about the role that Mastercard plays as the network, and safety and security, and cybersecurity particularly, especially in light of October being Cybersecurity Month, is particularly important for our business going forward.
So when you made $11 billion in net income last year and you just spent $2 billion buying another credit cybersecurity company, why is it that in 2020, former industry minister, Liberal industry minister Navdeep Bains had to give you $50 million to help on cybersecurity when you have that kind of profit margin and you have the ability to go out and buy another cybersecurity company for $2.1 billion?
Mr. Perkins, this is a question specifically about the Cybersecurity Center in Vancouver.
Why is it that you needed $50 million from the federal government, MasterCard, to pledge towards improving cybersecurity when you're already putting billions of dollars towards it?
We're very proud of our Cybersecurity Center in Vancouver. It's a center of excellence for us, one of the first in the world. We invested $500 million in that investment. It is exceptional because it generates Canadian IP, which is kept here in Canada and will be commercialized as Canadian IP. We see the value in driving cybersecurity from Canada, and it's something that we remain very proud of.
Does Jennifer Sloan still work for you?
She does.
She does. So Jennifer Sloan, who used to be a chief of staff in the Liberal government of Jean Chrétien, and her job, I believe, is government relations.
Correct.
Was instrumental in getting $50 million, obviously, because she had a pile of meetings with the industry department lobbying it before that announcement was made to get you $50 million. Why is it that a company with $25 billion of revenue and $11 billion of profit needs $50 million from the taxpayer to do cybersecurity to protect consumers?
I understand the question. Ultimately, I think it's very important for us to recall that we've spent $500 million in that, specifically the Cybersecurity Center in Vancouver. We're very proud. We've generated over 90 patents, Canadian patents done by Canadian researchers, and will be commercialized from Canada within the Mastercard network.
Here's you don't need the $50 million. So will Mastercard return it to the taxpayer?
Mr. Perkins, again, we've done a great job. We're very proud of everything that we've committed to in Vancouver. It's generating significant patents and technology and infrastructure and everything that's important to Mastercard as a cybersecurity center of excellence. And we're committed to that for the future.
This is the Liberal government has a history of handing out money to corporations who don't need it. Loblaw's got $18 million for fridges. I think Loblaw's can afford fridges. And you got $50 million for cybersecurity when you're spending huge amounts, billions, thankfully you are, of money. I just don't understand why you need taxpayer money to do what is your job, which is to have a secure credit card system for Canadians. Why is it you need taxpayer money when you've got billions to do it on your own? Isn't that your job?
Mr. Perkins, we're very proud of everything that's coming out of the Cybersecurity Center of Excellence in Vancouver. Again, 90 patents is not an insignificant amount. We've got a big team. We've got a big office there. We're generating new use cases every day, every week, and we're proud to stand behind everything that's being delivered from the Cybersecurity Center.
Merci beaucoup, Monsieur Perkins. La parole maintenant est à Monsieur Aria.
Thank you, Mr. Perkins. And now the floor is over to Mr. Aya for 6 minutes.
Thank you, Chair. Mr. Dory, I listened to your speech or whatever the note is. You mentioned the companies that generate revenue, that earn the revenue from interchange fees, they invest for the network security, preventing fraud. But you did not mention that part of it goes to fund the rewards. Did you mention that?
Thank you. I just want to make sure my mic is working. Thank you for the question. Absolutely correct. So,
No, did you mention that?
I believe I did, but if not, I'm happy
maybe
to
I missed
clarify.
it. Maybe I'll go through your notes again later. Mr. Hanna, Mr. Halwalia, the words you used were a lot of tangible rewards. And Mr. Halwalia, you said great deal value, etc. Nothing is free, right? I will come to it. And is it free?
Oh,
that
sorry.
great deal of value? Are we not paying for it?
I'm sorry, I don't understand the question, Mr. Tim.
You said
Yeah,
there's a great deal of value that is being provided.
that's right.
I'm asking, is it free? Are we not paying for it?
That's a great question for our CBA partners.
But you did use the words great deal of value. I want to know that the great deal of value which you mentioned,
Yeah,
it is not free, correct?
somebody's paying for it. That's correct.
Absolutely.
Yeah.
That's what I meant. Mr. Hanna, coming back to you. Mr. Littler of the Retail Council of Canada gave some numbers. In fact, I too was surprised to hear that number, $60 billion and $643 per family. Do you agree with those numbers?
Let's contextualize this for, it's on, okay, good. Let's contextualize this for a minute, because I think it's important. First off, rewards cards generate tangible rewards, and they do it across the income spectrum. 89% of Canadians have a credit card.
I know.
85% of those are rewards cards. And so as a consequence, the rewards are being utilized, and the beneficiaries are across the income spectrum.
No, that was not my question. My question was that was Mr. Littler misleading us, or the numbers were correct?
I think what he's not telling you is that in markets where what Mr. Littler is suggesting is that if value were moved from you as a credit card holder in the form of rewards over to a merchant, that somehow prices would go down and the merchant would be better off. We have not seen that in other markets. What we have seen is rewards have gone down, annual fees have gone up. There has been no discernible reduction in prices. And quite frankly, in the current...
I'm sorry to interrupt you. I got limited time. I got a few more questions. The rewards points, I don't want it to say, but still I'm paying for it, correct?
But you can choose. You can choose what kind of card you want. You can choose a rewards-based card. You can choose a card without rewards.
The interchange rate, will it vary based on the card I use?
No, the annual fee may vary. The interest rate may vary.
I'm talking about the interchange. Does it vary based on what card I choose?
Yes, there's some slight variation, but I'll let the networks tell you more specifically about how interchange works. That's theirs.
Mr. Halwalia?
Yes. So merchants derive great value from accepting credit cards, right? In the
No,
form
that's
of
not my question. My question is that based on the card I use or I choose, will the interchange vary?
there are varying levels of interchange for different types of transactions and different types of cards and different contextual scenarios.
Does it mean that, when I use a card to go to at a merchant, so do I know that what is that getting charged, or will I know that when I buy a new card or when I get a new card from a bank? At what point we'll know that whether I'm going to get charged on the interchange or not?
Well, you as a consumer will not be charged interchange.
No,
Merchants
again, at the end
pay
of the day,
interchange
we have
to
to
the
pay,
banks
right?
that provide their card processing service, sir.
And merchants don't pay from their pocket. They'll have to get it from us one way or the other, correct?
That's not entirely correct. So again, merchants derive great value from card acceptance, and one of those things is operational savings compared to cash or check, which is how things used to be. When I was a little boy and I went to the grocery store with my mother, she'd get to the top of the line, pass her groceries, and then proceed to pull out her checkbook to start writing a check. That is time and money for a merchant. What we've done with electronic payments is remove that cost. It has been replaced.
Sorry to interrupt you, Mr. Anna. I got 30 seconds. Last question to you. After listening to you, you have seen the text of our motion. It's almost as though that there's no problem. Is that what I heard from you?
I think what you heard from me is that consumers are getting good value out of cards. We think merchants derive a lot of value from cards. We think the market works well. It's evolving and it's continuing to evolve.
No, and so you are saying basically there's no problem at all. Why are you doing all this study, correct?
I'm saying the progress is being made. Everything can always be improved. There's new undertakings, new agreements coming into place that will add further value. But I'm saying we've made a lot of progress.
said, that is a very small portion of the total cost.
I think what I would say is that when you look at the value that merchants are getting and you look at the value that consumers are getting, it's a strong product, and it continues to be so.
Merci, Monsieur Aria. Monsieur Garon, la parole est à vous.
Thank you, Mr. Aria. Mr. Garon, you have 6 minutes. Thank you, Chair. Welcome, everyone. Welcome to our guests. It's highly appreciated to have you here with us. I found it very interesting, the questions by my colleague, Mr. Aria. I want to continue along the same lines. If you will allow me, Mr. Leman, if you allow me to translate it in French, the consumer, we don't charge the consumer for the interchange and for those costs. The consumer is not charged for that. You studied economics at university, you were at the at HEC, so you've seen the impact of a tariff. When a rate is applied, it's not because it's not posted that the consumer doesn't pay for it. If you increase the production cost of a good or of a transaction, people pay it. I'm sure you know about economics, everyone here. So what you said is false. So I would like to understand the question of interchange. My colleague's question, Mr. Aria, his question was the following. When he asked you whether the consumer pays for the reward programs, because we know that there is a cost attached to it. You said, and I'm trying to understand, this is a complex matter, you said that there are different fees charged to the retailer depending on the transaction and whether you use the card tap or not, depending on the type of card or type of reward program. Those rewards have to be paid for. Did I understand correctly? Could you please clarify your question? So you indeed said that the costs charged to the retailer differ depending on the type of card used and the level of risk of the transaction and the reward program. Yes. And if you had two different customers who don't have the same type of card and both of them want to buy some cotton candy and they come to the cash register and they put on their credit card, both of them will pay the same price. Yes. And the merchant, the retailer, will not be charged the same amount if there are different cards and the risk level is different. Did I understand well? Yes. So as a result, often the higher costs for reward programs, coming back to Mr. Aria's question, the higher costs will often accompany a higher reward program because you have to pay for that. That's what Mr. Aria suggested. Did I understand well? That's not entirely correct. Correct me then. The interchange cost varies depending on the type of card and the type of transaction, but you have to understand that it's a substitute for other forms of payment because you talked about economics. You said that it was false, but I just want to clarify that in economics there's also an implicit cost, or if there's cash, then it's an implicit cost. He's not answering my question, Chair. I want to repeat the question. I'm not attacking anyone. I'm just trying to understand because I thought that my Liberal colleagues, it's not very partisan, but I found it a fascinating question. So the question from the colleague was to say, if for one reason or another, in view of the fact that two customers are using a different type of credit card with a different program, I think that's what I understood, then the costs charged to the retailer are different. Then someone is paying for it, but it's asymmetrical because the person who is charged on a credit card, let's say for cotton candy or for tires or whatever, they'll both pay the same price on their credit card statement, which raises the concept. And the Quebec or Canadian Retailers Council, it's regressive because implicitly among the different users of credit cards, among credit card users, ultimately, a person who has lower income that doesn't go to the hotel as often or to buy gas as often or has fewer points or bonus dollars or whatever will end up paying for a richer person who has, in fact, my question is coming, who has a more generous reward program. So would you be opposed to us publishing those costs to the customer? So when I come in and I buy a product at the cash register, it's transparency in capitalism that enables people to make decisions. It's important. When you charge a credit card, then you allow the retailer to explicitly pass on the rate to the customer. So a higher rate for higher reward programs, or being explicit and say to the customer, this is how much the credit card is charging me, and you put that on the invoice. It allows the people to have transactions that you have a more efficient capitalism. Isn't that true? It's a very interesting idea, and one that in our network is already permitted. Retailers already are entitled to pass on a surcharge to customers who use a credit card and to adjust it depending on the type of card. So how often do you see that? You would have to ask that question of our friends in the Canadian Council. I still have 40 seconds for the Retail Council of Canada. How often do you see retailers posting the credit card rates on the bill to the customer, and these contracts that are signed between the credit card companies and banks and so on and retailers? How often do you see that it's allowed to do that?
Well, you never see it posted. There is certainly permission now, and it's in the wake of a class action lawsuit. I should indicate the networks didn't volunteer this up. They did everything they could for a great many years to hold off any surcharging, but it is allowed in a lot of other jurisdictions. And not unlike most of those other jurisdictions, retailers tend not to surcharge. And they do that because ultimately they're concerned that they will see a loss of business. If it were commonplace, perhaps more would do so, but nobody wants essentially to commit seppuku by being the first to surcharge. So in essence, it's a right without much of a remedy.
President.
Thank you, Chair. Thank you, Mr. Garon. Mr. Massé, over to you.
Come here and testify under oath. And you might want to follow the committee hearings. We have a minimum of 4 meetings, but sometimes we bring witnesses back, especially the first set of witnesses, because often we get testimony later on that could be something we need to corroborate. So the first one I'd like to ask is maybe going across to Mr. Dory there. Do you carry a credit card balance? Like my credit card that I have has a 20% interest surcharge. So I wanted you to know, like in terms of I don't pay it fully off, do you actually carry a balance or do you pay it off at the end of each month? Yes.
I'm not comfortable sharing my personal financial situation with the committee.
Okay, well, I'm willing to do that. I try to pay mine off as much as I can because it's 20%. How about, would you care to offer whether you pay off every single month?
I'm not going to say that either.
Okay, that's fair. Fair enough. Yes.
Try my best.
Yeah. Okay. Try your best. So you sometimes have to pay in the 20%.
It depends.
Okay. Fair enough. Yeah. Thank you.
Yeah, I try my best.
Okay.
The majority of Canadians, the overwhelming majority, 71% pay it off in full every month.
Okay, so that's actually, I'll follow up on that. That's wrong in terms of the information I'm getting from Equifax and others right now. So are you contesting then that your numbers are different than Equifax and others that are actually showing that Canadians actually aren't paying off more than ever before?
I'm telling you, that's the information that we have based on our surveys.
Based on your survey. So, okay, so this is just Bank of Canada surveys. It's not Equifax, it's not the others that are out there. It's just your surveys.
I believe it comes from the Bank of Canada, but I'll check.
Okay, no, that's fair enough. It's fine because the information I'm getting is that Canadians are significantly up, and so I guess one of the reasons I'm asking this is I'd like to know specifically: have you noticed any difference in behavior with regards to the credit cards that you're using? And I'll go maybe across the back here to get everybody involved here with regards to usage since the pandemic. So is business up or down since the pandemic with regards to usages and behaviors and in the model of I guess people were going default, not default, paying off. What's changed over the last number of years, if anything?
Well, I'll say a couple of things. First off, arrears rates, as I mentioned, continue to be quite low, 1.6%, which is great. During the pandemic, not surprisingly, there was a big shift to e-commerce, people buying online. Because obviously they couldn't shop in store. I think a lot of that has reverted back to the conventional sort of more pre-pandemic retail environment. I think my colleagues at the networks could probably give you a sense of what that looks like.
Okay, so is that an opinion or is that actually a fact? Because what the facts that I have is that actually credit card use and electronic transactions are still up. Money is rebounding somewhat, but it's significantly different than before.
Correct.
Okay.
It's reverted. It's reverting back.
Yeah, slowly, but Mr. Dorr, do you any change in the business model? So I'll go across back so I can include everybody here.
Yeah. No.
Yeah. No, it's all the same.
We're not involved with the lending money, so can't comment.
Okay, no, but what about usage? So your business, you're saying, okay, so your business right now has not changed. It's exactly the same model as you have right now that you had before the pandemic, and the pandemic didn't change you, and it's the same right now. So nothing's changed in your business at all.
Yeah, there have been some changes. There is elevated use of electronic commerce as opposed to in-store.
Okay, thanks.
Yeah, similarly, I would say our business grew significantly during the pandemic. We saw both online, as the CBA mentioned, but also in store as people wanted to get away from cash. And also we enabled a higher tap limit for contactless transactions to allow more transactions to happen at point of sale where people didn't need to interact with the point of sale. And so we saw a significant growth during that period of time. I think the CBA is looking at some of the same statistics that we see in our business, which is that has regressed to the mean in the years since then. Our business continues to grow in line with economic growth. That's certainly the case, but it's no longer accelerated, and that acceleration that occurred during the pandemic is dissipated now.
Okay, so going back to what is the evidence then that like I'm just going by stuff that's come in, basically available to public, Equifax, other types of surveys that are out there. What is shown, I guess, that the business model doesn't need to change for all the rest of the banks and the borrowing rate and so forth. So the use is up. What benefit did consumers get with the usages going up? Because obviously that requires, I guess, an adjustment of business plan in terms of, accessibility, all the things that Mr. Evendori mentioned, they changed some of their practices. What did the customer get out of the benefit? Because I didn't see interest rates go down. I actually took on a public campaign to actually reduce credit card interest rates. You're probably familiar with that, the start of the pandemic. What changed with regards to percentage-wise and borrowing rates and so forth for consumers?
Well, what the benefit that consumers get through credit card payments are substantial. They get the ability to shop in person or online. They get complete security. They get protection from fraud. They get the ability to buy on credit, particularly if they're buying on sale. They get the ability. They get they get rewards.
So they got rewards and they got thing, but the percentages stay the same then, and they're still the same now. So you mentioned to Mr. Perkins that the rate of a large is 1.6% rate. Okay, but you can't break that down. So how do you get that rate then? How does that come to you? So let's follow the chain here in terms of you can identify that, thank you, but you can't break it down, but you've come to a cumulative rate of 1.6.
That comes from Equifax.
Okay, so, all right. So we would have to then get Equifax actually to break down some of these numbers, and so we'll have to look to do that. Okay, so now most of Equifax, again, is they're talking about, the rates going up with regards to Canadians having to pay for, just basically goods and services that are more urgent, like their buying habits have changed. So, Mr. Dory, maybe go across this way. Have you noticed with your customers, you're buying the purchasing decisions where Canadians have made? That's part of the reason we're doing this study is if they're using the credit card more, and the evidence coming in is that they're paying higher rates of return and so forth, they're more vulnerable. So perhaps, do you do some analysis or whatever in terms of what that affects your customers?
We do in part. So there are parts of what I think you're describing which belongs to the financial institution, the banks, and the credit unions that issue the credit. And you're correct. I think they would be more appropriate to answer those questions because they know those customers and they know those products. We don't at Visa. We do track spending in the economy between what we talk about as discretionary and non-discretionary spend. So those elements that really a family needs to buy no matter what, versus a discretion might be a vacation or a trip or durable goods. We've certainly seen a decline in those non-discretionary areas of spend over the last 12 or more months. Discretionary spend has continued to be stable.
Okay. And
sorry, non-discretionary.
No, got it. Thank you. Mastercard?
I'll echo exactly. In terms of trends, we've noticed the exact same thing.
Okay. And do you get that data? I don't know if you guys think.
No, we don't have that specific data. What I would say generally, though, just to your point, is look, from a bank perspective, we always want to make sure we put the right person in the right product to suit their needs.
Okay, I got a little time, but really quickly, what would be your opinion, Mr. Dory, then about should there be an interest rate different from discretionary and non-discretionary purchases? I mean, if we know what's changing Canadians is their debt level and the use of the vehicle being that what they're paying for in credit cards, and the pandemic shifted them. An out-of-market decision made them switch to cashless society. Do you think it's fair to have discretionary and undiscretionary interest rates at the same rate?
Yeah, I'd say, first of all, incredibly empathetic for the situation that many Canadians are in today. The cost of everything has gone up, and that's very challenging. Secondly, I think it's important to point out that the provision of short-term credit for many Canadians got them through those challenges. And as the CBA has pointed out, most of that borrowing is very low term. With respect to your specific question, I do want to answer that. Unfortunately, it's not the part of the business that we're close to. Those aren't our customers, and we don't set those rates or see that. So I'm afraid I don't have a comment on that particular question.
Mastercard?
Talked about earlier the roles and responsibilities between the different parts of the ecosystem. From a network perspective, that would be the CBA that would focus on it.
Okay, and Bank of Canada?
Yeah. Canadian Bankers Association.
Sorry. Yes, sorry. Pardon me.
Okay.
Thank you, Mr. Hanna.
No problem. As I said, we want to make sure we put the right consumer in the right product. And we want to be able to try to find a product that works for them. If there's a better product they have that we have available with a lower rate, we want to put them in that product.
I'm just concerned about competition. I'm probably out of time, Mr. Chair? Yeah.
3 minutes over, Mr. Massé, but it's your study, so
appreciate it. Thank you, Mr. Chair.
Je passerai la parole à Madame Rempel-Garner.
Madame Rempel-Garner.
Mr. Perkins laid off. I'll start with Mastercard. So just to clarify, in 2020, an announcement they made at a Davos conference, you accepted $50 million from the federal Liberal government. Is that correct? $49 million. So in 2023, Mastercard's global revenue was about $25 billion. Did you ever consider that it might be, putting it mildly, reputationally problematic for a company like yours that many Canadians intimately understand the cost of using to take $50 million of Canadian tax dollars for something that you should probably be doing anyways on your own?
Thank you for the question. I think we've invested $500 million in the Cybersecurity Center of Excellence.
But cybersecurity is important and integral to your business, right?
Correct.
So why did you take 50 million tax dollars for something that you should be doing anyways from the federal Liberal government?
I think from where outcomes focused, I think there's a focus on driving new patents, taking Canadians, employing them, giving them those high-paying, high-wage, high-technology jobs, and an opportunity.
So the fees you charge, the fees that you charge to business is a big issue, and some folks here have talked about because those fees potentially get passed on to consumers at a higher cost, with things being higher priced. At the time that you took 50 million Canadian tax dollars from the Liberal government, was your company's lobbying posture against changes or a cap on the amount of fees that you could charge to businesses?
I'm afraid I don't understand the question.
So were you lobbying at the time to not change the status quo on what you could charge to businesses?
That's not my area, unfortunately. I don't know.
You don't know. Okay. Do you think it was possible that the $50 million you took from the federal government and the $500 million for something you should ostensibly be doing anyways was to keep the status quo or keep the federal Liberal government from changing the status quo on what you could charge to businesses for the use of your services?
Our focus is investment and growth, and Cybersecurity Center of Excellence in Vancouver allows us to continue to invest in the infrastructure.
Like, don't you think it's a little sus or weird to ask for $50 million of Canadian tax dollars for something you should be doing anyways?
Look, we invested $500 million. It's something that we're very proud of.
Out of $21 billion. Thank you. I'm going to then, I'm going to go over to Mr. Hanna for perhaps a little different line of questions. People with high debt to income ratios, like put a different way, people who pay a significant amount for their mortgage right now, they may use their credit cards more frequently for things like groceries or gas. Would that be a fair characterization?
Possibly.
Possibly. Okay. I know that there's a lot of people in my community who do. I hear about it in my office. So the change between a 25-year amortization or a 30-year amortization for a mortgage, right? It might sound good because it might lower your monthly interest payments, but I did a little research, and on the benchmark price of a home in March of 2024 and the total mortgage, the interest paid in over the life of a mortgage, the difference that somebody would pay in interest from a 25-year mortgage to a 30-year mortgage is roughly about $122,000. Does that sound ballpark about right?
Perhaps.
Great. So would you say then, like, a 30-year mortgage doesn't actually make life more affordable for Canadians? It just makes your banks a little richer?
What I'd say is that it gives an additional option. And what, in that case, what has to happen is, and what's important then, is your banker and the customer need to meet, talk about the options, and look to determine what works best for the customer. Ultimately, this is a relationship business. The customer you're talking about has at least 2 products with the bank and probably more. They want to make sure that that customer is well served. They want to make sure that that customer is being provided with good value. And they want to make sure that that customer is able to continue to pay.
And look, I know that there's risk in providing Canadians with mortgage, but would you say that like increasing that 30-year mortgage right now, it does make the product a little riskier for you and certainly for the consumer as well too, right?
What I'd say is that it's another option. Arrears rates on mortgages are very low, 0.2%.
But they're
increasing, strong market,
right?
They're increasing from a pandemic low that was a historic low. They're reverting back to the norm, but they're still incredibly low.
So would you characterize like mortgages as affordable in Canada right now?
I would characterize them as being a competitive market, as a market, frankly, let me separate out mortgages and housing. Housing can be quite expensive. Absolutely. I live in the GTA. I know what expensive housing looks like. Mortgages, very competitive market. Its rates did go up as interest rates went up. They are coming down, which is absolutely true. There are options out there, and we want customers to shop around, particularly in that
Would you say
context.
then that perhaps the best way to make housing more affordable for Canadians is not to increase the length of the mortgage, but to increase supply so that prices go down?
We have been firm in saying that this is a supply-driven issue. That is absolutely true.
Thank you.
Merci beaucoup.
Thank you very much. Mr. Badaway, you have 5 minutes.
Thank you, Mr. Chair. First line of questions with respect to Mastercard and Visa. How does your company support financial literacy? Initiatives attached to literacy aimed at helping consumers manage credit card debt effectively?
Sure. I can go first. Very briefly, I think financial literacy and ensuring that Canadians understand financial literacy is a very important topic. What we have done is focused our attention on small business. I think the CBA and their member institutions have done a very good job and continue to service the financial literacy services. Overarchingly, we've been focused on driving the robustness of small business education, whether it be cybersecurity or overarchingly our investments in investments like Peer 5, which is a group that we're a part of. So we've focused our attention on small business financial literacy.
Mr. Drury?
I'm happy to respond as well. Visa continues to invest significantly in financial literacy and financial education around the world, but certainly in Canada as well. That takes many forms. Similar to our friends at Mastercard, we invest in small business education. We also have been running programs for the last several years focused on small businesses and their digital enablement and digital empowerment. But what really structures our financial literacy efforts is the curriculum that we've developed that's been peer reviewed and tested in Canada and elsewhere, that's available for free without a Visa brand on it to educators and to trainers for primary, secondary, post-secondary for new Canadians and new families. And that curriculum has been delivered thousands of times in Canada.
Do you find it would be beneficial, and Mr. Hanna talked about relationships, and I'm happy to hear that, because a lot of what you're doing are affecting people's everyday lives. And with that said, and seeing the position some folks might find themselves in, would you think it would be a good direction to take to actually create more of a relationship with your customers with respect to that financial literacy? I won't use the word flagging, but I'll use the word communicating and being transparent with respect to what your thoughts are on some of the positions some of these folks are finding themselves in.
Yeah, without question. And that's something we absolutely do and want to do more of, and we continue to invest and build. I could highlight some other elements that we've done, programs trying to really get the message out in financial literacy. We have a great partnership with FIFA. We'll be bringing new tools to Canada around FIFA that are focused on youth and financial literacy, using soccer and using FIFA as a way to get that story out and that message out. We've had historic partnerships with Marvel as well, producing comic books for Canadians, using Canadian terminology, talking about Canadian banking. And I think it's 7 or 8 languages now. So I completely agree with your point. That's something that we take our responsibility in quite seriously.
Okay. And how do you ensure compliance with existing regulations related to credit card fees, interest rates, and what challenges do you face in this area? We'll start off with Mastercard first.
Our network rules require that our issuers follow all applicable laws in Canada. And items such as interest rates, the level of interest rates and so forth are dictated by Canadian laws and by consumer privacy and consumer protection.
What challenges do you face?
As far as we know, all of our customers are currently compliant.
Mr. Drury?
Yeah, similar answers. So we work with regulated financial institutions, both federally and provincially. They're accountable to their regulators and to the government for consumer protection. It's not our rules to enforce that, but we do have provisions in our rules to remove someone from Visa and from their membership if they violate those terms, particularly in a sustained way. I'm not aware of any issues in Canada where we've had to take action, but that's the compliance framework that we run. I would also add, and this is something that I think is relevant for this committee also, is the Code of Conduct for the payments card industry in Canada, which we cooperate with the FCAC, the Financial Consumer Agency of Canada, to ensure that those rules are promulgated. That's not a consumer protection framework, but it does ensure market conduct for acquirers that deal with merchants to ensure that they have rights as it comes to those payment relationships and contracts.
Okay. And what is your company's stance on limiting or capping high interest rates or excessive fees?
Yeah, thank you for the question. And again, not to redirect, but that's not our part of the business and not something we deal with. What I would say, though, is in any market where we've seen those reductions, the typical response has been higher fees for consumers, lower benefits, and higher APR.
Mastercard?
Thank you for the question. Ultimately, we have clear lines of responsibility where the network lines are versus the banks versus the acquiring banks. When we're talking about interest rates, we're talking about the purview of the CBA and the member institutions.
So although not your area, you're the card, you're the plastic.
Mm-hmm.
The banks are the interest rates, et cetera, in terms of what they would actually provide. But the question is not to the banks right now. The question is to you. I get it. It's not your purview, but I'm asking you the question. What is your stance on limiting or capping high interest rates or excessive fees?
I think ultimately the Competition Bureau would have an issue if we were to step in and start to regulate interest rates. So we have to be very careful about the rules and regulations that govern the relationship that we have with our bank partners. So ultimately, I think our position is that it's a marketplace, and they will continue to be within the conduct of our franchise rules and the rules and laws of Canada.
Mr. Dury?
I believe the answer would be the same. I mean, truly, I don't want to get too far away from our core business in describing that. But as I stated, in markets where we have seen regulation or those fees come down, there's been consumer harm and higher fees.
Last question. What future improvements or innovations are you considering to address the concerns related to credit card practices?
So Visa continues to invest significantly in our network and in our products that are issued by banks and financial fintechs. I mentioned previously some of our investments in fraud and security. I'd highlight those again. Those are critically important for consumers that are dealing with fraud and dealing with a dramatic increase in scams. And our investments, both in traditional technology and in AI and other tools to be able to limit and prevent fraud, truly has a dramatic impact and a dramatic benefit for consumers, but also for merchants. Ultimately, having a system that is safe and trusted, where fraud is lessened and where those protections are available, means that merchants will have more sales, their businesses will grow, and ultimately they'll be successful. And that's a significant part of our focus right now.
In much the same way, I think as we've driven more transactions onto our network, cybersecurity continues to be something that we continue to invest in. Mr. Perkins and others have alluded to investments that we've made from an inorganic growth perspective to help bring in the best and the brightest while focusing on research and development in-house. And that's what we're focused on.
And speaking about the investments that you've made, the $500 million that you invested in Vancouver, could that $500 million have been invested somewhere else?
Of course.
Different country?
Of course.
Thank you. Thank you, Mr. Chair.
Merci, Monsieur Ballaway. Monsieur Garon, 2 minutes. Merci, Monsieur Ballaway. Monsieur Garon, 2 minutes.
Thank you, Mr. Ballaway. Mr. Garon, 2 minutes.
Mr.
and a
Garon,
half.
2 minutes and 30 seconds.
Thank you, Mr. Chair.
Mr. Chairman.
I will
I'll let you
everybody
put on
their
earphones.
headset.
Mr. Hanna,
Mr. Anna, I liked what you
really
said.
liked what you had to say at the beginning.
In your statement, I was listening to you carefully.
And obviously,
I have a lot of respect for the banking system. We know how important it is. And one of the important characteristics of the Canadian banking system is that it's regulated, which means it is stable, which means that
the consumers always trust it.
Customers trust. And it's part of your comment. You said we are heavily regulated
as an industry.
In the context of credit
cards.
Two translation for the price of one.
Yep. Oh.
I will speak a little bit in French. Mr. Arya, is it still two voices? Can you hear two voices? Now it's good? Great. Mr. Garon, please start over. A little bit before where you were. Essentially, we're talking about regulation. We are proud of the Canadian banking system, and other banking systems were more unstable. And this leads me to the issue of credit cards. How come that for interchange fees, instead of regulating, we were in a context where the finance minister adopts a rule and tells companies, if you don't voluntarily agree, we will hit you in the finger, and the companies finally agree on a temporary agreement, which will expire in 2025. Same thing for code of behavior, the voluntary code of behavior. How come, like, when you're very proud of regulation in front of the industry, but about new regulation, you're not enthusiastic? Mr. Garon, if you could perhaps speak a little bit slower for the translation. No, you're not aggressive, but you're speaking pretty fast. So if you give me 20 seconds, I will condense the question. 20 seconds more? So You know, Canadian official languages, it's often like this. What I was saying, how come, like when it's about getting solid regulation on interchange fees or not having voluntary codes of behavior, we don't feel the appetite of the industry for new regulations? How do you explain this paradox?
I will ask my colleague, Mr. Doherty, to speak about the regulatory environment that we have, but suffice it to say it's substantial.
Mais donc, la question c'est.
So the question is, when we asked for a robust regulation on interchange fees, how come the industry didn't say we want a regulation, we support it, rather than voluntary agreements? Each time bankers introduces the industry says, yes, great, we're regulated. But when we want new regulations, we don't feel the enthusiasm.
And I would mention that there is a role for codes of conduct in the regulatory sphere because they can be changed quickly. They're adaptable to different circumstances. The agreement when it comes to interchange, just to reiterate, was between the government and the networks, not involving the banks. So certainly, yes, the banking industry is highly regulated. There's a lot of legislation. There's the Consumer Protection Framework in the Bank Act. There's many provisions they comply with.
Est-ce que l'industrie, je vous pose une question courte, c'est pas une question.
Sorry, here's a short question. Is the industry too regulated?
I don't think it's for me to say one way or the other if the industry is over-regulated or under-regulated.
Et ce serait à qui de nous le dire?
Who should be answering this question?
Government policy and reaching the right balance between regulating and not regulating. And, banks would work with the government to pursue any types of enhancements when it comes to consumer protection regulation.
Thank you, Mr. Garon. Monsieur Massé.
Thank you, Mr. Garon. Mr. Massé. Point of order. Just one second, Mr. Massé. I just wanted to underline, I think it's important. I know that technicians and interpreters are doing as best as they can, but in my previous turn, because of technical issues, I felt the inequality between the way both official languages are provided. I was interrupted 2, 3, 4 times. It's also difficult for witnesses to understand questions. And I want to tell you that as a French-speaking MP, I thought it was very unfair for me and for witnesses who had to go through this. Well, I think the injustice that you are referring to is more of a technical nature. We live in a country with both official languages, as you know, but regarding in terms of how much time, I'm usually quite generous. Mr. Massé.
Thank you, Mr. Chair. Let's get Mr. Littler back involved here. I have here a poll from Harris Poll that was conducted, and with the Retail Council, I mean, we've already heard here some of the boogeymen that are always thrown up is that if we lower the percentage costs of borrowing, there's going to be equal higher fees, and we've heard cybersecurity and so forth, and all that, which I've worked on quite extensively over a number of different years. And the issue, though, that I'd like you to address is the fact that purchasing has changed, and I'm wondering whether the Retail Council has an opinion. Real quickly, 64% of Canadians talk about higher prices in general for goods, 30% major unexpected purchases, 28% related to unemployment was earning less money, mortgage payments, 17%, living situations, 17%, and other 6%. So that other might be competition, perhaps, or portion of that. It's not competition that's changing. So I'd like the Retail Council to talk about a little if there was more purchasing power for Canadians on actual goods as opposed to using finance as a business itself in terms of borrowing rates. What could that mean for the lives of Canadians and also for manufacturers, distributors, retail that are doing more than just moving money around as a business?
Mr. Liller, you're on mute.
My apologies. I'm going to resist the temptation to come back to the interchange for the moment, because obviously if that financial cost were not there, there would be greater affordability. But speaking more generally, I would echo actually some of the comments that have been made earlier, that what you're seeing is a consolidation and obviously in some cases a shortfall with respect to sort of non-discretionary purchases, the stuff that people need to keep body and soul together. And obviously that's being squeezed by inflation. It's also being squeezed by interest costs. It's being squeezed by a multitude of essentially non-discretionary things. And we have seen that certainly play out in the context of the retail setting. I don't know whether I can speak to how other players in the mix who are into more of the financial instrument space could positively influence that. But obviously anything that can alleviate pressure that arises in the context of borrowing, whether that be for mortgages or credit card, if you're carrying a revolving balance, obviously to the extent that that was alleviated, that would free up more money for the necessaries of life. That's about the only answer I could really give.
No, that's good. And I will let you complete on the interchange fees, because you heard the responses and you deserve the right to respond to that. I guess my concern is what I've already heard here, which I suspect is that, we've all had to adjust and out of necessity our behavior with regards to the pandemic and subsequently thereafter. But it appears this industry has not had to adjust with it. And that's my concern for other parts of the economy. So, but I will let you, please, you mentioned Australia, UK, other interchange things, and perhaps highlight how to actually, pass that savings on, because we're already hearing, again, I've heard this one before, is that if we lower interest rates, and it's funny because you can actually have people call and get lower interest rates at different times, that they'll just increase fees somewhere else in hocus pocus, your savings are gone, the boogeyman's out there, and it's going to cost you more. So we just can't do anything. We just have to accept the situation that we're in right now.
So I guess I'd say a couple of things. And one of them is that a number of the witnesses physically present have touted the virtues for merchants and for consumers around, the access to a broad market, the security, all of those elements, protection from fraud, the coverage against counterfeit and so forth. Let's be really clear. In Australia, they do all that. In France, they do all that. In Britain, they do all that, and they do that for 30 basis points, right? Which is in the order of less than a quarter, more like a fifth of what is being charged in Canada. So all of those benefits accrue to the merchants and through them and post-purchase to the consumers. They occur in every one of those other markets that have prices for interchange way, way, way below what we do. Where this racks up the money is in rewards points, which are regressively profiled, where the wealthiest people, certainly the people who are eligible for the highest fee cards, get the most benefit, and it is paid for by everybody else. And of course, the big pot of gold at the end of all of that goes to the banks as profitability.
Thank you. Thank you, Mr. Chair.
Merci beaucoup, Monsieur Massé. Monsieur Généreux pour 5 minutes.
Mr. Généreux, 5 minutes.
And I'll just have a little reminder for our witnesses. The best is to wait for the red light to turn on. Don't touch the microphones. It will appear. And when it's red, you can start answering the question, please.
Merci beaucoup. Merci à tous les témoins.
Thank you very much. Thank you to all the witnesses. Mr. I have a hard time with your name. Mr. Adoualia, what is the Mastercard's profit last year? 13 billion? Did I hear right?
11.2.
Monsieur Dory, chez Visa.
Monsieur Dory, Visa, what was the profit? What were the profits like?
I don't have that information with me. I'd be happy to provide it to the committee. It's a public document. I think it would be.
Monsieur Dory, vous avez dit tantôt, vous avez investi.
Mr. Dory, you said earlier that you invested 11 billion for cybersecurity. Did I hear correctly?
Cybersecurity and technology, correct. Cybersecurity is a portion of that investment.
Uniquement dans la dernière année ou?
Only over the last year or through a few years?
Yes, those investments began in 2019 up until today, and those continue to accelerate.
OK, donc sur une période d'environ 5 ans.
So over a period of about 5 years, did you ever ask for a grant or a loan from the federal government to invest in cybersecurity? Did you ever get money? If so, how much?
In Canada, no.
Donc Visa n'a jamais demandé d'argent.
So Visa never asked money from the federal government to invest in cybersecurity. Mr. Could you please tell me how you pronounce your last name? Ahluwalia. Okay. Mr. Ahluwalia, at Mastercard, you had $11 billion profit last year, and in 2020, you received, or you asked, did you ask for that money, or did you, the $50 million for cybersecurity, where Visa does the same thing, and they never ask for a subvention, a grant. What, were you offered that money, or did you ask for it?
I think the Cybersecurity Center is an important center of excellence for us. It's something that drives innovation. It's something that we should all be very proud of.
That's not my question. My question is, you made 11.2 billion in profits last year, and 4 years, you had a grant for $50 million to put to start this. Do you have a Visa Center that has been established, the equivalent of what Mastercard has in Canada?
Not in Canada, no. Our investments in cybersecurity, much like Mastercard, are global, and so our cybersecurity centers are based in other places around the world.
OK. Les emplois que vous avez créés chez Mastercard, vous aviez une subvention.
So the jobs you created Mastercard, you have subvention to create 380 jobs. Do these 380 jobs still exist in Canada after getting this loan?
I can get you the exact number, but we have a full office contingent in Vancouver.
OK. On a appris en fait que dans quelques semaines, il y aura une diminution
we
de.
learned that there will be the 27% of fees will be going down. This is what we learned when it comes to transaction fees on credit cards. Has the government offered you anything in exchange in this agreement that has just concluded, if I understood, among credit card issuers and the federal government? How come today we can manage to give such a reduction of 27%, and apparently this wasn't possible beforehand? Can somebody answer? Perhaps Mr. Lehman? Thank you for this question. You are correct. The interchange rate lowering is going to represent about 27% for 90% of merchants in Canada for in-store transactions. It is a result of negotiations with the Ministry of Finance. Okay. And why? We've had the same government for 9 years. Why wasn't this done beforehand? Can you answer? No, it was done. There was an agreement that was concluded in 2014 that began in 2015, another one in 2018 that started in 2020. And now this is a third agreement, which is a third reduction. And now there's a total reduction of 20% plus a 27%, which is coming in. And this is within a 10-year period. So 3 lowering successively. Yes, but when you compare that to what is like the representative of the Retail Council was telling us, said in other countries like the UK and France and in Australia, the rates are so much later. Why are we still dealing with such high interest rates in Canada? Is this the power that you have compared to the government to fix these? If we had an agreement now, why hadn't you lowered them by 75% while you're at it? Well, it is really hard to compare one market to another. The card market in Europe is different. It's a charge card. So that has to be paid in full. by the end of the month. That's different. Whereas in North America, we actually have credit cards where you can pay the balance over a number of months or weeks or years even. So the product type is very different. So it's difficult to really make a parallel. And the merchants' advantages are very different. For instance, for the sales, what you can do in Canada compared to somewhere else. So it might be 20% more per sale if you buy through credit card for a merchant compared to debit cards or liquid, treasury. It's very different to the European context. Yes, but we also mentioned Australia. We also mentioned the UK. Okay, the UK is in Europe, but it seems, in Israel or everywhere else, there are fees, but the fees are much less high than they are in Canada. And it can't just be because of the cards that you have to pay at the end of the month, whether it's a charge card or a real credit card, which is the case in Canada. But is that really the only difference involved here? Is that why there is such a big difference in transaction fees? Well, that is the main difference. And I do agree that Canadian rates are actually lower than a lot of other countries. What do you mean lower? I understood that Canadian rates are much higher than in other countries. I'm talking about transaction fees. Well, I agree that when you answered the questions, you said that rates are much lower in Canada, but I can tell you that Canada is much lower compared to the global rates, and we're actually much lower than in many other countries. Thank you so much, Mr. Généreux.
Mr. Gaillard, the floor is yours.
No, thank you, Chair. I couldn't hear you before. And thank you to the witnesses for appearing before committee. So there's been a lot of discussion about the fees and transaction fees that are involved. And I think there's a little bit of confusion as well. So I wanted to focus just on the network assessment fee and the interchange rate. And both of those are actually set by the credit card companies, so Mastercard and Visa. So I wanted testimony from both Mastercard and Visa, Mr. Aluwalia and Mr. Dory. We know that the interchange fee is the small amount of money that's charged that a merchant pays when you make a purchase with a credit card or a debit card. And the fee will largely go to the credit card issuer, but it's set by Mastercard, Visa, and others. But I do want to say that some of the merchants, like grocery stores or gas stations or restaurants, are they're known to raise their prices to cover that interchange fee. Could Mastercard and Visa maybe give testimony on the average interchange fees that you charge, Mr. Aluwalia and Mr. Dory?
Yeah, go for it. Sure.
So, as mentioned throughout today, there are additional new reductions coming for small businesses in Canada, and the average rate for an in-store transaction, which would apply to a grocery store, which is your example here, will now going forward be 0.95% from that perspective.
So, but that is for businesses that I think have a transaction with Visa for $300,000 and with Mastercard for $175,000. But for companies and merchants that have more transactions of a higher dollar value in credit cards, that reduction wouldn't quite apply to them. So outside of that range, what's the average interchange fee that you guys charge? Do you know?
I'm happy to answer the question for Visa, if that's helpful. And thank you very much for the question. I think you've heard from all of us here today that the market is fairly complex and there's many players that are involved in really any transaction. And so there's the issuing bank that provides the card. There's the acquiring bank or payment provider that provides services to a merchant. And then there's the network that sits in between. And there can be more players as well, depending on what that transaction is. Interchange is the fee that's paid to banks. And in Canada, overall, those rates are 1.4%. 1% on domestic credit card transactions. That includes point of sale. It includes e-commerce. The new reductions that are going in place for small merchants will produce an average of 0.95 basis points, slightly below 1%. Some of those transactions will be above 0.95. Many of them will be below 0.95. The overall average will be 0.95. You also raised network assessment fees, or the fees that Visa charges.
I'll come back to that one after, if that's okay.
Sure.
And Mr. Littler, you have your hand up. I'll just come back to you as well. So what I wanted to say was, obviously for small businesses, it's a big change. They're more likely to accept credit cards as a payment because of the policy that our government has put in place. But what I wanted to say is, Mr. Aluwale, during your opening testimony, you talked about how you have to set the interchange rates at a rate where the card issuer is likely to participate in this program. But what I wanted to raise was, and this has been touched on a little bit, was that, when you look at the Reserve Bank of Australia, they've set their credit card interchange rates at a weighted benchmark of 0.5% of the transaction value, with a ceiling on individual rates of 0.8%. When you look at the EU, they have caps for interchange rates of 0.3% for consumer credit cards. And I guess the point that I want to make, or at least the observation that I'm making, is, the EU or Australia, they seem to be doing fine for attracting different card issuers to participate in this program. So why isn't there room for more improvement? Isn't there room to lower interchange fees and yet still attract card issuers to participate in Canada?
Thank you for the question, Mr. Gahir. The reason why I asked Mr. Lehman to speak is because he leads interchange and pricing for us for Canada. Ultimately, I think we're very proud of having, gotten to where we've gotten to, a 24% reduction over the last number of years. We sit in the middle. And as we were saying earlier, it's a job for us to balance the needs of our issuing banks with the needs of our acquiring banks from a merchant perspective. And it's a delicate balance. And I think we've reached a level where both sides are relatively maximized, and I think we're proud of that.
Okay. Look, the observation that I'm making is just that, other places seem to be doing fine with the lower interchange fee. We know that merchants like to pass on interchange fees to their consumers. So I think that's definitely a topic of conversation that can be had, of where that balance should be set. Mr. Littler, you had your hand up before. I don't know if you want to make a comment.
Yeah, it was 2 points. One of them is, and I know Mr. Dory is a very fair guy, but he said briefly that the 1.4 would be lowered to 0.95, and it most certainly will not be as an average across the portfolio. I'd be surprised if it even got to 1.35. It will be lowered to 0.95 for in-store transactions for some relatively small businesses that are numerous, but ultimately generate perhaps 10 to 15% of all retail sales in Canada. And so you need to understand, obviously, if you view it as a consumer issue and don't paint it into a corner as a small business issue, that when those people are shopping, as somebody indicated earlier, the grocery store or a larger gas station or whatever it will be, they will not be benefiting from that, and it won't lower the average overall.
Yep. I also wanted to talk about network assessment fees. Again, these fees are also set by the credit card companies. We know that that network assessment fee is the fee that the credit card company charges the payment processor per transaction to access the credit card network. If this is too high, it can potentially discourage merchants from accepting credit cards. Is this true to the credit card companies?
Well, there's a concern, and it's not unique to Canada. There's a concern that as fees are lowered at one end, that they're raised on the other. And so merchants will complain, and I don't have chapter and verse on this, but that is, they've seen some savings in some settings from some of the reductions, particularly the one in 2015 and 2020, that there's been a proliferation of other fees. So that's the concern that they have. But I don't get as much feedback from members other than perhaps a bit of frustration with respect to network fees.
Do the credit card companies want to talk about the network assessment fees?
To speak. I think my red light is on. The network fees that are charged and properly assessed to acquiring banks and payment service providers represent a very small part of a transaction. They're also publicly posted and publicly available, and they've been largely stable for more than a decade. So for Visa, that's 0.09% on a transaction, significantly below anything that you would see for example, the fees that are charged to a merchant by the acquirer, which in fact make up the bulk of the cost for any merchant.
Yep. So when I go to local
Thank you,
merchants,
Thank you, Mr. Gaillard. You're well over your allotted time. I'll now turn it over to Mr. Patzer.
There we go. Okay, thank you very much. So Mr. Badaway had a very interesting way of closing his line of questioning with Mastercard. Basically, he insinuated that if they had not given you guys that $49 million, that you would have built this project somewhere else. Is that true?
Sorry, can I ask that question again?
Mr. Badaway, in his last question to you, insinuated that if they did not give you the $49 million, that you possibly could have built this somewhere else. Is that true?
We made a strategic decision to pick Canada and Vancouver for its resources and the richness of the talent pool.
Okay. Did you put this concept or idea out there to other countries? Did other governments offer you similar amounts of money to build in their country instead?
I'm unaware of the details of that.
You're unaware of those kind of details. Okay. All right. In the press release that was tied to this announcement of you guys receiving the $49 million, it also said that there was a $420 million of this project was actually eligible for funding. So was there more taxpayer dollars given to Mastercard for this project above and beyond the $49 million?
No, I believe it's $49 million.
Only $49 million, so there's nothing else. Even though 420 was eligible, there was not a penny more than $49 million?
That's correct.
Okay. All right, thank you very much for that. Given that your guys' revenue from 2020 to 2023 has increased 67%, do you regret taking $50 million from the taxpayer?
We're really proud of everything that we've done at our Vancouver Cybersecurity Center, Center of Excellence. It's generated nearly 90 patents that are made in Canada by Canadian resources, folks who went to school here, grew up here, and we only expect that to continue to grow as time goes on.
But for everything else in life, there's the taxpayer. There we go. Yeah, I mean, Visa, when you see your competitor get a $50 million handout from the government, does that not make you think, well, geez, where's my $50 million? How come I didn't get $50 million?
I think it might be fair for me to say no comment on that particular question. Thank you very much.
That's okay. Has the government ever approached you, though? Has they ever approached Visa, though, about accepting grants or contributions to try to get projects built here in Canada?
That's an excellent question. I'm just trying to recall through my tenure at Visa if that's occurred. I think the answer is no, but I would need to confirm that, and I'm happy to respond to the committee with that detail.
Okay, thank you very much. Mastercard, just back to you guys. In regards to that $50 million, just curious, did you guys come to the government and request $50 million, or did they come to you and say, hey, here's $50 million?
I'm unsure. It's before my tenure, and I'm happy to get back to you and the clerk with any answers.
Okay, do you know with the money, because the money that is actually, lots of times with the Sustainable Innovation Fund, actually they give you the option for repayable loans or some that are non-repayable. Are you considering repaying the taxpayer, given that you had a 67% increase in revenue?
We've invested $500 million in the Cyber Center in Vancouver. We're proud of everything that we've done there and will continue to do there. It's an integral part of our global network and expected to commercialize good Canadian research outside of Canada. So something we can all be proud of.
All right. How many other countries do you guys have data centers built in? Or I guess knowledge centers, cybersecurity centers? How many other countries have you built in?
So Canada was the first, and it's the only cybersecurity center of excellence. We have others, but Canada was the first.
Have other countries pitched you on building one in their countries?
I'm unsure. I can get back to you.
Okay. If the answer is yes, can you see if their governments are offering you money as well?
I can certainly get back to the clerk and yourself on that.
Okay, thank you very much. Yeah.
You're
Chair,
about out of time, Mr. Patzer.
Out of time? Okay.
Merci. MP Van Bynen, the floor is yours for 5 minutes.
Thank you, Mr. Chair. I'm trying to sort out the transaction and the costing of the transaction as we go through. So Mastercard and Visa, all you do is take the transaction and the portfolio is managed by the banks, correct? So they get the rate of return, et cetera. Okay, and I'm hearing about this 0.95 average fee. Is that for every transaction? So if I was to pay with my Visa card $100, 95 cents would go to who?
The bank that has issued the card.
That has issued the card, okay. So I'm trying to understand how the increased cost would be from the bank's point of view if I charged $100 or if I charged $1,000. And if so, why would I pay $9.50 for one transaction and 95 cents for the other?
Well, from the bank's point of view, bear in mind this is credit. I'm extending unsecured credit to a customer for a period from the point of purchase until the point, literally at the end of the grace period. So as a consequence, the transaction is greater. Likewise, the fraud risk is greater. I am making the customer whole in the case of any sort of fraud liability. So there's a risk associated with all of this because this is ultimately a credit product.
So I'm more likely to be fraudulent if I was to pay for something with $1,000 than $100?
No, the bank has a certain amount of exposure.
Okay, so we can come back to that. Is the risk-based pricing of the transaction? So the last I saw is the prime lending rate was 2%, which prime plus 2, which may or may not be an average lending rate on your portfolio. But I see that the credit card average rate is 28.2%. And that is the risk that we're paying for? Is that the risk factor?
Well, let me say two things. One, I don't think that's actually the rate. That sounds awfully high. But let me go through and explain a bit about the mechanics of credit card pricing because it's unique. Credit cards are a couple of things. One, obviously an unsecured product, which we've discussed, available to 89% of Canadians activated at point of sale in real time. So they're widely available. That's part of the pricing. Part of it as well, though, is the unique properties that credit cards have relative to other credit vehicles. One, they're the only one that has an interest-free component. 71% of Canadians pay their card off in full every month. So for that, the the bank is providing free credit to a customer for a period of from the time of purchase through to the end of the grace period. That is a cost of funds to the institution. In addition, the credit card, unlike every other credit product, has an entire point of sale activation system, real-time fraud monitoring, real-time protection against liability, 24/7 customer support. All of that is part of the unique value proposition that comes in the card.
But none of that changes with the value of the purchase transaction, does it?
What it does do is it changes the cost of managing the product for an issuer as opposed to, say, just providing you with a line of credit.
Okay. So do you know what the average rate of arrears is for your portfolio other than mortgages and credit cards?
Not with me, I don't, sorry.
Okay. Well, my concern is that you're saying your arrears rate was 1.6. Did you mention
for cards? Correct.
And so why is it that we would have such a high price at prime plus 20%?
Well, as I said, it's the nature of the product as I just described. But again, the ultimate truth of it is that 71% of people are paying their balance off in full every month, so they're paying nothing. And for the others who decide to carry a balance, there are low rate cards available. Most issuers make one available, some are multiple. In addition, as I mentioned, for customers who want to keep their existing card but still want to carry a balance, maybe they get rewards from it that they like, it may have an association that they want to maintain. There are innovative products like installment loans and term loan products that allow you to reduce the interest, make structured payments, and therefore manage your debt.
So the credit card then becomes a feeder for the balance of your portfolio. Is that correct?
I'm sorry, say that again. I didn't hear that properly.
Credit card balances become the feeder for the balance of your portfolio? If someone
Feeder, I'm sorry, I don't understand what you mean.
If someone's not paying their balances, you would encourage them to use installment loans then?
We would certainly work, if you're a banker, you certainly want to work with your client to help them manage their finances in a way that works best for their family. If that's the option that works best, that's great. If it's another product, then we'll work with them in that way as well.
You mentioned, I want to come back to this risk-based pricing. So there are certain cards that belong to individuals that are exceptionally good risks. Do they pay the same price as people who are not exceptionally good risks?
Well, if you are a customer, first off, you do have to qualify. It is a credit product. Absolutely true, you have to qualify. All of the terms and conditions, though, are described clearly up front in a summary box that you get at the time of application that shows what the rate is, what the fee is, what the terms and conditions are, so that you can decide which one makes the best sense for you.
That's not my question. Is do you have a risk-based pricing model built into your product?
Ultimately, all bank credit is risk-based.
No, I'm talking about the credit cards. That's our discussion today.
I can't speak to individual banks' risk-based pricing models, but I can say generally, as a prudent lender, you make risk-based decisions.
Okay. And if the losses are a concern and the transaction are concerns, have you thought about reducing your risk selection criteria to reduce the risk level so that you could reduce your pricing model?
Every bank makes its own decision. That's a product decision they'd have to make. But given the competitive nature of this marketplace, you are seeing low-rate product in the market to try to attract a certain set of clients for whom that makes sense.
Okay. How does the CBA monitor member banks' compliance with consumer protection regulations related to credit cards, and what actions are taken in cases of non-compliance?
Well, the CBA is not a regulator. I will let my colleague, Mr. Doherty, speak to the regulatory environment.
Absolutely. So the banks that are part of the association, and any bank basically in Canada, is subject to oversight by the Financial Consumer Agency of Canada. And they can issue fines. They have a number of supervisory tools in their toolbox to ensure compliance.
Merci, Monsieur Van Bynen. C'est tout le temps que vous aviez. Monsieur Garon, la parole est à vous.
Thank you, Mr. Merci. All the time you had. So thank you, Mr. Chairman. Mr. Alualia and Mr. Mr. Lemon, you mentioned, and I want to make sure that I understand, you talked about interchange fees and the percentage, and that you said that Canada was midway between all of the other countries. Is that what you said? Yes. Is that, Mr. Alualia, is that what you said too? If you don't mind, could you give our clerk these calculations and these categories? Because obviously we're carrying out a study on, as you know, on debit cards and credit cards. And if this allows us to understand how important this subject is, if you don't mind giving us this information. Yes, of course. Mr. Littler, I want to ask you a question because I was surprised. We did research. We don't always get the same results. It's the devil's in the details. And they say when we hear that Canada and Canadian businesses are not dunces when it comes to the interchange fees and all of that. Is that what you hear also? That we're only midway and our fees are really not all that bad, are they?
So there, first, for members, there is a study by the Kansas City Fed that is updated every year, and it's done by an economist by the name of Fumiko Hayashi, who is like really well known in this space. She's also worked with the Bank of Canada before on some studies, and it actually does indicate for a significant selection of countries what their rates are. And there are indeed some that are higher than Canada, but for the bulk of them, they are lower, and of course, significantly lower. I'm going to maybe go out on a little bit of a limb if I have time. The reality is that where they've been lowered by public authorities, let's say, like the Reserve Bank of Australia, which is obviously a central bank, like the European Commission, which is a competition authority, where the settings where they've struggled to get lower rates tend to be in milieus where parliamentarians, legislatures of various kinds are the ones making the decision, although not invariably. Places like Israel and so forth, legislatures have stepped in. But for the most part, legislatures lend themselves to some pretty assertive lobbying, for those who have a significant interest in this space. And in consequence, it's usually where somebody who's taking a more...
Permettez-moi, Monsieur Littler, de rebondir un petit peu là-dessus.
Parce que... to come back on this issue, because I've asked our witnesses some other questions about the fact that the government had forced these rates to go down. And we had said, if you don't manage to agree with us, Visa, Mastercard, unless I'm mistaken, but if you don't agree with us by this date, we're going to force you. So this is a big incitement, because it seems to be an industry that really wants to avoid regulation, and maybe these voluntary agreements between Mastercard and Visa and the government means that other people will come in. American Express isn't part of it, unless I'm mistaken, and there are other players who might come in. This voluntary approach, do you think that that could be permanent? Do you think that this could be the better model? I understand that when it comes to codes of conduct, okay, I understand that it has to evolve very quickly. I can buy into that. But how come, if it's the case, and you'll correct me if I'm wrong, when it comes to interchange free, other jurisdictions have also decided to regulate them? And in the end, the banking system didn't collapse after all.
Well, that is exactly right. And I mean, obviously, they fought a rearguard action in Europe and in Australia against being regulated, but regulation was of course, what was ultimately decided upon.
Et peut-être une dernière question, je peux me permettre, Monsieur le Président.
One last question, if you'll allow me, Mr. Chairman. We have agreements, and the agreements, I understand, are real. I understand that there has been they've been lowered. There's a little asymmetrical depending on the size of the business, but these are agreements that are not regulated, nor are they permanent. Mr. Littler, does this worry you? What is going to happen once these come to the end? The people that you represent, what are they going to do? Are we still in some kind of nebulous zone? How can we make these agreements with the big credit card companies permanent?
Well, I probably would recommend that you go down the path of regulation and actually set a competent, sort of authority to look at the economics of this, because it does often get played out in political theater. I think that it doesn't lend itself well. That's not to say that some aspects, particularly for the code of conduct, are maybe more suitable for voluntarism. But I mean, this is about money at the end of the day, and very large amounts of it. I mentioned $60 billion. So sort of, a handshake agreement, or maybe a little better than a handshake agreement, is obviously less compelling than a proper regulatory approach to it.
Merci, Monsieur le Président.
Thank you, Chair. Thank you, Mr. Massey.
You've rightly shown pride in your patents that you developed. How many have gone to market?
I'm unsure. I can get back to you.
That would be good. And is there an agreement with the government, with the center you're doing here, that those are commercialized in Canada? Is that part of...
From Canada, yeah.
Yeah, so
the work is done here. It's commercialized from
Canada. Yeah, that's an important distinction. I wanted to make sure that's clear, because I've come from a place, tool and die, mold making, everything. We get lots of patents. Doesn't necessarily mean it's produced in Canada. So I want to clarify that. I think it's important for the record. Thank you. Quickly over to Mr. Hanna here. You keep mentioning 71% of Canadians. That's not what the Harris Poll survey said. And I'm going to read from their survey here. And it's not what Equifax as well says. They actually say more than half of Canadian adults, 55%, currently have credit card debt, up from 43% when asked a year ago. The repayment periods for credit card debt are increasing too. Of Canadians with credit card debt, 51% say it will take 6 months or longer to pay it off, up from 40% a year ago. These trends dovetail with the findings from Canadian credit bureau Equifax. Total balances for Canadian credit cards reached an all-time high in the third quarter of 2023, with the average balance rising to $4,119, according to Equifax Canada Market Pulse report. So, quite frankly, explain to Canadians now, if you have your 71%, this is what's saying something different. So there's a 20% margin difference there, which is quite significant. And then you maybe kind of tell Canadians now how you can then actually get a lower interest credit card rate. What would be your best advice to get that for those 50% plus Canadians, or even to the 30% that you argue about, to get a lower rate? Because my constituents don't have that same experience when contacting credit cards and trying to accumulate or consolidate and so forth. Maybe a public service announcement right now would be helpful to tell those that are paying off massive amounts of debt of $4,000 or more how they can get a lower rate.
My advice is always the same. Talk to your bank. Go in, tell them your situation, tell them what you're looking for, tell them what you need, have the dialogue. Most issuers offer one. Go in, have the discussion.
Okay, so if that doesn't work, what would you do next? Because that's what I'm getting for. Because
that's when you shop around. This is an incredibly competitive market, 26 different issuers, a couple hundred products, and a product that, frankly, is basically a perfect substitute for each other.
Okay, and I appreciate that, and because I want to end on a note for helping some consumer advocacy here, but here's the other problem too. What would you say to those people then that lose all their points and all the other things, the trinkets and baubles that are attached to credit cards right now that they have been paying into, and sometimes fees to get those things? Like I know my credit card charges a certain amount to actually again accumulate points, then they lose all that. So all those people lose those points. Should there be work done so that people actually accrue those benefits and can transfer them as well too? Is that something your organization would support?
Well, they're definitely not trinkles and baubles. These are real value. They're giving people real value that they can use for real expenses, which is important. And it's also important because what we've seen in other jurisdictions that have regulated is this is what has been lost.
So would you agree, though? Okay, fine. I'm explaining it that way because people pay for them ultimately one way or the other. I mean, you pay for everything. Nothing's for free. You mentioned that earlier. What would you agree to, or what would be possible for people to transfer those benefits? So similar to when we went to telco companies here, is when you transfer from one carrier to another carrier, you can keep your phone number. Why can't people keep the same type of benefits equally amongst credit cards for the types of benefits that accrue? Sometimes air miles, sometimes other benefits for point systems. Would your association support a transfer of that because that's wealth that they give up if they actually have to switch a credit card to get a lower rate, because they go on bended knee to the banks. So would you support that there would be transfer of that wealth that people have accumulated? It would be aero miles and points and so forth, that would be translated into some type of an economic return that they would then get benefit for the new card?
What should happen is that if the people want to get a new card, they go in, they have their discussion, and then they ultimately decide if that's the product for them. They can keep their existing card as well if they want, use up the points that they have on there, and then transfer over to a new one. That's entirely up to them.
Yeah,
that's
20% or 30% or so forth. But the whole point was trying to get people out of massive amounts of debt. So, okay, well, we'll work on this, and I thank you. I know you've been generous to the time. Thank you, and thank you to the witnesses coming here today. I really appreciate that.
Merci, Monsieur Massé. Monsieur Perkins.
Thank you, Mr. Massé. Mr. Perkins.
My last round here, I'll start off by saying I did spend a few years working at a head office of a bank on Bay Street, as well as on an executive team of 2 retailers. So I do know what the internal rate of return on equity of the bank I worked for in credit cards, and it was 52%. You've focused a lot, the Canadian Bank Association, on the cost, but they're making a massive amount of profit. When the bank's target ROE was 15%, it was making 52% on credit cards. And I like Mr. Van Bynen said, clearly it's business development to move them to other products because they don't cut the credit card off when they make that shift to a line of credit. So my question, though, I'd like to ask about the interchange. The interchange revenue, Visa, I guess, is the best people, or Mastercard, whichever one wants to take it. The interchange revenue is based on a percentage of the sale. yet the cost does not change based on the sale, does it?
In fact, so the benefits that are afforded to consumers, both in terms of insurance, fraud protection, loss underwriting, as well as the provision of credit, that all fluctuates with the size of the sale and the amount of the underlying transaction.
Yeah, but the difference between what the credit cards company get on 2% of $100 or 2% of $10,000 is very different, and your costs don't go up that much.
With respect to Visa, the costs do fluctuate a little bit. With respect to the card issuers, the banks that are issuing those amounts, I would say they do. You know, the cost to refund a transaction that has been counterfeit or fraudulent for a $100 transaction is $100. That same transaction.
The loss is 1.6%. Generally, bank losses overall across a bank are less than 100 basis points, sometimes less than 50. 1.6% is not huge. In fact, the Business Development Bank of Canada's loan losses are over 2%, and they still make $500 million profit a year. So this is a very, very profitable business, and the expenses don't go up exponentially. For Visa specifically, I just want to summarize. If I understand correctly what you said to my colleague, Mr. Patzer, you were putting the cybersecurity business here because of reasons other than $50 million, because of the talent pool, because of technology, because of the universities.
Certainly part of the thought process.
And nobody else was offering you money anywhere else. So you were coming here anyway, you said. So the $50 million that you took, like the $18 million that Loblaws took for fridges, seemed to just be free money for you, where you were coming here anyway and it made no difference.
We're very proud of everything that we've
I know you're proud of it, and you must be proud of taking the $50 million of taxpayer money when people are in record numbers lining up at food banks. But with that said, Mr. Chair, I'd like to seek unanimous consent on this issue of Visa, and I'll move it as a formal motion for a vote if necessary, but I hope we can get unanimous consent. I believe this may have been sent to the clerk. Maybe it could be circulated. The following motion: that the committee order the production of all documents, emails, memos, and any materials related to the Liberal government's $50 million handout to Mastercard, including the communications between ISED, PCO, and the PMO with Mastercard regarding the grant. And the committee report to the House and express its concern regarding the value for money for taxpayers on the nearly $50 million taxpayer money given to Mastercard by the Trudeau Liberal government. I believe that's been sent to the clerk.
Thank you, Mr. Perkins. You're very hopeful to think we can get unanimous consent 5 minutes before we adjourn the meeting at this committee on such a motion, but I appreciate your optimism.
Just a straightforward document production motion. I'm sure everybody
has it been sent in both official languages? So the clerk will circulate it to members for them to take a look at it. I think it would be fair to give members some time to consider it duly. I'm looking at the other members. Is it? It can be debated now, or otherwise, what I would suggest, Mr. Perkins, is that we come back to it at our next meeting. Yes. So what I suggest, Mr. Perkins, you moved it on the floor, and it's okay because it's on the topic. However, I would suggest that we bring it up at the start of the next meeting so that members have the time to review it and we can then debate it if you so decide. Is that okay with all members? Yes, and your time, so we'll get back to it. But technically, considering there is a motion on the floor, we probably should just adjourn the meeting at this point. We're at the end of our time. However, I know Mr. McKay had one question, so if members permit, I'd allow Mr. McKay to ask his question.
It's a nice try. Yes, I don't usually sit on this committee, but it just so happens that my visa is due today. And the money has been moved out of my bank account, but it's not been moved to credit my Visa card. And I dare say, because I've watched this happen a few times, is that the money kind of sits somewhere for about 24 or 48 hours and then ultimately gets credit. And it used to be that they would ding me with interest until I yelled and screamed and jumped up and down, and they stopped doing it. But somehow or another, and here's my scenario, is if I were at my credit limit, I would not be able to conduct a transaction.
And that would be a detriment to me, even though I'd paid off my credit card. At least the money had been taken out of my bank account. So to Visa and to the bank, I got a feeling that somebody's making money out of this, and it's not me. And I don't quite understand the interchange or exchange between the bank and Visa and how that affects a consumer like me, but somehow or another, the money's out of there. So the bank still has the money, but Visa doesn't have the money. So the bank's got my money for free or overnight, or sometimes it's a lot longer than overnight. And I don't get any compensation for that. And it seems to me that that's true of literally hundreds, well, more, millions of transactions. So I'd be curious as to, in the 25 seconds you've got left, how you explain that to consumers who are, like me, regularly and routinely pay off their account on time.
Answered in 20 seconds or less, apparently. Two things. One, as you rightly pointed out, you get credit for payment on the day you paid it, irrespective of how long it takes to go between your bank and the bank of card issuance. With respect to the mechanics of actually expediting that is very much that's what we're working towards with the real-time rail and real-time payments movement, so that payment can move literally in seconds from one institution to another institution.
What I don't understand is why that doesn't now move in seconds, because if I pay a transaction with my grocery store with a debit card, it's like that. Why is it? Why? And because it's held up money, who is it that's making money on this interchange?
I can't speak to interchange, but I can tell you right now, the first part that you're talking about is what you're observing is authorization. There's real-time authorization, but the money moves between institutions over the payment system, and that tends to happen. Unfortunately, right now, overnight, we are working to resolve that through the real-time rail project with Payments Canada. I'm sure you've probably heard something about that, but if not, certainly there's more that can be discussed.
Okay, I'll let it go there.
Thank you, Mr. McCabe. Merci à tous les témoins pour votre participation.
Thank you to all the witnesses for participating today. It's highly appreciated. Thank you for participating and have a good day. Thank you to all the colleagues.